Hello, everyone, and welcome to Market Talks. I'm Ray Salmond, head of markets at Cointelegraph, and in this show, we discuss the latest market trends along with valuable insights from industry leaders, traders, and analysts. Today's guest is Michaël van de Poppe, CEO and founder of 8 Global, a cryptocurrency education and consultancy program. Michael's been basically a full-time trader at the Amsterdam Stock Exchange since 2017. He is interested in everything related to blockchain and its current use in the financial system. He also has more than 648,000 Twitter followers who look to his technical analysis and insights to gain better understanding of what's happening in the markets. He also has a degree in economics and business from the University of Amsterdam. Let's take a short look at a video about Michael. Hello, welcome. How are you?
I'm all good. Thank you for having me, man. How are you?
Good. I have no complaints. I'm happy to talk to you. It's been a while since we've chatted. For the audience, we've kind of known each other for, I guess, going on 3 years. You publish analysis at Cointelegraph here and there, and we've kind of watched you develop your career, your business, your trading chops and expertise in the space. So it's good to see you again.
Yeah, it's been a while. And it's been a tough year, but it's good to be back on the pace. And it's good to meet you again. Also, the guys from Cointelegraph. I think we have not been speaking to each other for half a year or so. So it's great to be back on the grind. And I think the entire crypto market is ready to wake up at this point.
Yeah, I agree. And hey, what doesn't kill you makes you stronger. So we might as well jump into it, audience. We're going to keep this one short because there's an important football match coming up in about 42 minutes. And,
I
we
was
don't want you to
literally
be
just
late
wearing
for
a shirt of the club. So I just get on
it.
and dressed. And after this, I'll just swap it again.
Yeah, that's okay. I mean, you could have worn it and had a few pints there. There's nothing wrong with that. It's your evening. So next time, go for it.
Yeah, sure.
So based on the higher time frame market structure of the entire crypto market, what do you see happening right now and how are you feeling about the market? And I guess to give a little preface to this, prices are breaking out today. Bitcoin's at 25,000, Ethereum's pushing at 1800. There's a lot of bullish momentum across the market. That's something I didn't really expect given that the SEC is cracking down on staking solutions and on centralized exchanges. And there's this whole thing with Paxos and BUSD. And there's a lot of bad news flow related to crypto right now. And the CPI print came out a little bit hot, which everyone expected, but it was still, hot. So to see crypto just running higher and higher on the daily is a bit of a surprise to me. I wasn't expecting that. So based off of your analysis of the crypto market and kind of like the longer time frames and the market structure, what do you see right now and how do you feel about this market?
That's like a ton of questions within one question, so I'll try to address it briefly. But um, it kind of surprises that the market is looking at the current level. So we have been rallying from 15.8 to 25K. And then we've got the hot CPI coming in. We've got the SEC crackdowns, which I'll come to in a little bit. And we've got the PPI coming in today as well, which is a different metric, but kind of the same as CPI. Also came in way more hot than expected, which means that both of the metrics of inflation actually are not accelerating the drop down, but they're actually stabilizing, which would mean that equities and Bitcoin would drop off because there is an argument to be made that the Fed is going to keep on pushing those hikes, which they have been doing. And what we can also see being reflected in the dollar currency index, the DXY, rallying up. Now, what we should have been taking into account is that the crypto markets in itself have been going through a period of continuous pain, I would classify it, because we've had the collapse of Luna, we've had 3AC, we have got the contagion out of that, which I would classify FTX in. People say that FTX is actually the big collapse, but I think that FTX is just a small contagion after 3AC and Luna, and the actual risk was within the Luna crash. So we have been going into a sideways period for 8 months. Then the FTX crash took place, and that was the bottom. After that, we've had DCG, which went bankrupt, or at least a part of DCG went bankrupt. Ultimately, it resulted into the markets going up. While you would assume that if something goes bankrupt, that you would expect the markets to go down. But actually, as a matter of fact, going bankrupt gives the stakeholders the better papers to actually get something back from their money. Now, what's also surprising is the fact that the Nasdaq just keeps on pushing and just keeps on rallying, which means that being into Bitcoin and having that rally at this point is maybe a surprise to anyone. But we also see the Nasdaq showing strength while the inflation numbers are getting in hotter than expected, which would mean that the that and either of the two is being wrong at this point. So either the Nasdaq is wrong and the Bitcoin is wrong, or the inflation data could be different from this period, and after this, we continue to fall. We've also got retail sales this week, which is way more positive than expected, so the entire recession debate is getting a little bit away. We also know that CPI came in, but they use a different metric, and that's why we could have been getting a higher number. So we have to see that next month. And we also know from Powell that we're seeing the fact that they will potentially pause the hikes relatively soon. Then going back to Bitcoin and crypto, I think crypto has been getting into a period where the valuation of Bitcoin is the lowest it has not been seen since it started. So we have moving beneath the 200 week MA for the first time ever. Um, we've got the weekly dead cross, which is the first time ever. We've had the fact that we have been dropping to 15K. An on-chain analysis, you can see that the valuation is relatively low. Then we've got the sentiment, which is extremely bearish. Even though we've had been rallying towards 25K, there's still a big group of people shorting the markets, expecting the markets to fall. And actually, I've got a question today from someone who said, hey, I want to DCA into the markets, but everyone says the markets are going to go down. What should we expect from here? Well, that is the bear market mindset that people still have. If something starts to rally and break out, so many shorts are getting triggered. They have to be getting closed by longs, which are going to be opened. Then new shorts are getting opened because people are still fed up into the bear market mindset. And that's what we are into right now. So summarizing this entire thing, and then we start to discuss the SEC in a bit, but I think that we are into a period which is classified as 2019, which is kind of a relief rally going into the halving next year, and which is a short window where the markets, including indices, have some period to go up. Then there's the question whether we're going to have a recession later on. But I think for now, the markets are into a period of relief and a breather, which means the markets can start rallying up, and they can continue rallying up because there's just a ton of liquidity of shorts that get activated. And what you also see, corrections are slim. So we've had a correction from 25K to 21.5. They are slim because people are rushing to get into the markets. And when the market's correct, people open shorts. So when the buyers are stepping in, these shorts are getting liquidated quite fast. And that's why you get those steep rallies, which we have been seeing in the past 2 days. And those can just continue. I think you should be looking up the rally we've had in 2019 and the beginning of 2020. It can just keep on rallying if people keep on sitting into the bear market thesis at this point. And the moment that people are saying, okay, we are convinced this is the bull market, we are ready to go, that's probably the moment you have to take profits again.
Right, right. That all makes sense. And one thing that I kind of want you to explain to us briefly, because it's all the talk of the town. Everyone's now talking about pre-CPI, post-CPI, FOMC, the other one, the PPI. Everyone's talking about that. But you're a professional trader. You trade more than just cryptocurrency. So from a bird's eye view, what should a retail trader understand about the Fed's policy? Is it working? Are the interest rate hikes working? Is the fact that their most recent CPI report came in hot connected to January being a holiday season where everyone's spending and there's seasonal hiring and wage growth remains high because companies were trying to get people in for January? I mean, like, what does it mean that interest rates keep rising, the NASDAQ keeps rising, the S&P 500 keeps rising, crypto keeps rising, is what the Fed is doing working, or is it not working? I don't really understand it, and I'm sure a bunch of other people feel the same way.
I mean, any of the two will be wrong at the end of the day. What you also have right now is, I've not been checking it, but the yields have been rallying too, a bit. So the dollar is rallying, the yields are rallying, gold is rallying, indices are rallying, and Bitcoin is rallying, which means that that doesn't make that much sense at this point, because any of those should be falling. And most likely we will have a case where the inflation starts to fall again. So if I go back to your question, which says, okay, we've got CPI data, what should retail traders do with it? I think that it's a very complex market and it's a very complex world to live in. And if you want to analyze everything, people usually get into a period where they overanalyze and then they start to make mistakes. So what you want to do is, if we get a specific number about CPI from the previous month, we could be having that it's in holiday season and that's why the numbers are up. That's maybe also the reason why retail sales have been doing really well in January specific. But we could also have a metric which is adjusted, and therefore the numbers are getting a bit higher. But as a matter of fact, the fall has been larger than the previous month. But the previous month we had a different metric, so we can't recall. So what a retail trader should be doing with this is that they essentially should not be trading the events, and just erase everything that is context, which means that CPI, Powell, invasion of Russia and the Ukraine, PPI, everything is context, which is just noise, and therefore it disturbs your strategy into trading. What you should be thinking is, okay, so Bitcoin is currently 21K. We have been seeing a fall to 15K. Everything has collapsed within the cryptocurrency world. The dollar has been rallying, but is currently falling, and Bitcoin is not running up. What is the thesis that I could do, and what could I have at this point? We could fall from 21K to 10K, which is the consensus everyone thinks of. But we could also start a rally towards 200 to 300K if I hold for a few years. So in that way, you're just looking at the price action and you're just investigating, what have I experienced the past 1.5 years? Is that going to happen again? Probably not, but that's what you see on social media, as people have that only experience. And if that's not going to be happening, can I make a risk reward out of the trade that I can do? And then you're not even focused on CPI, PPI, or anything else. If Bitcoin drops to 10K, it is it is within the boundaries of the risk and reward, but your risk is relatively limited because your reward is just quite high at this point. It's the same as when you are into the markets in 2021, and in hindsight, you could see that the policy of the Fed had to be adjusted, or that they started to hikes during that period with QE. You could have a thesis then as well when Bitcoin is at 65K, and probably in the future when it hits 150 to 200K. Hey, if I start to buy Bitcoin right now and everybody says it's going to be to 300 to 400K, what is the thesis that I have? So if I buy at 150K and it goes up to 400K, okay, I get a reward of approximately 140%. But if it drops to 50K, I've got a loss, which is approximately 70 to 80% if it drops even lower. And then it gets a bit more riskier to start looking for long. So I think retail traders should erase all those events, should not hype it, should not focus on it, should not try to analyze it at all, because you need a lot of experience to actually analyze those events. And as you can hear from me, I can't find an argument for why those numbers are the number and why the markets have been rallying. But I can make a thesis for retail traders to make it simple for yourself and even more effective, because I think that if you use such a way where you erase all the context, you probably beat the largest amount of the people that are trading into the markets.
Yeah, that makes sense. I like your suggestion and simplifying the approach and do what works for you. So regarding the market, how do you track the interplay between Bitcoin, Ethereum, and altcoins? And I mean by that, like, how does what these two large caps do impact your approach to investing in altcoins? And if possible, if you could show us a few examples, that'd be great.
I think if you go back to the one in 2019, we've had a Bitcoin run which was fueled by Libra. and there was like the plus token scam which pushed it as far as I recall. But at least you had a Bitcoin run in which altcoins were falling behind. But I think this time it will be relatively different, and we have already seen some arguments for that. Is that Bitcoin starts to rally up. Altcoins have been delaying all the updates that they wanted to do in the past 8 months because of the bad market environment. And now you can see projects, other layer ones, Matic, Phantom, um, everything related to AI, which is essentially an hype. But those are all doing really well. So Bitcoin starts to show strength, and then the money rotates into the altcoins if Bitcoin starts to stabilize. So if you can see on the chart, I will just show it in a bit. But if you can see on the chart, yesterday Bitcoin started to make a steep run. So it ran with approximately 1.9K or so. The moment it starts to shoot up even more, the algos will flip the altcoin pairings, which means that the altcoin will drop in Bitcoin value, but it will continue to rally in USDT value, but it just drops a bit in the Bitcoin value. So altcoins are lagging behind. That means that people are jumping their altcoin towards Bitcoin. But once Bitcoin stabilizes, which we have also seen in the recent history, altcoins start to shoot up. And that's how it rotates, in a sense that how am I moving that into my thesis as a strategy? I think mostly when it comes to altcoins that are rallying quite fast, which is Phantom, the Graph, etc., you can start using the fact of, hey, I'm just using those levels so I can trade those. And if Bitcoin starts to accelerate, I'll just move to Bitcoin and then I swap back. When it comes to swing trading altcoins, it's just an argument of, okay, Bitcoin starts the uptrend. I'm going to validate. I'm going to move into my altcoins in the positions and I'm going to hold for a certain period of time, because the window of Bitcoin rallying and then altcoins following is quite difficult to address and quite difficult to manage unless you are a full-time trader, and then it's still difficult to manage. So therefore, simplifying everything is making more sense, and then just positioning yourself well. And what I just said about Bitcoin and the thesis of the ROI you can make, if you believe that Bitcoin starts to rally from here, you can do the exact same with altcoins, and then it just comes down on risk management of your portfolio.
So, what are some altcoins that kind of are catching your eye right now? What altcoins are looking interesting to you? Which ones are you charting?
I mean, there are so many at this point which are actually interesting. I think you agree
Yeah.
on that point. If you look at a few altcoins which essentially have been running quite well, I'll just remove this for a bit. I'll just show a thesis which we have. We've got on the chart. We've got Phantom at this point, which has been into this sideways period since May. And I think you can see it all across the markets at this point. We've got this sideways period since May, and the acceleration starts to take place once it breaks through those highs. So what we can see here, we consolidate, we start to get some momentum, and we start taking out these highs here, and therefore the price starts to accelerate. What you see is a period of accumulation, and what is driving this breakout is actually the updates that come out of the projects, or some momentum in a certain segment of the market, which is with AI, for instance. So with Phantom, we've had a run which is already 4x. So what you can learn from this is that accumulation is what you want to see, and then some hype to build up, or at least a higher low, so we can start breaking out. And then you've got a second thing you should be analyzing here is that we've got this resistance around the May high, which we probably are going to break out and continue running from. And then we've got this big gap towards the previous support in the bull market, which is still untouched. So probably if this continues to rally, we're going to rally all the way towards the level we have here around $1.10. And that is what you're going to see with the altcoins. What do we see here with Phantom? Acceleration, hype around this high, retest of this previous high, and now consolidation before continuation. Which altcoins are interesting for me? I think it's not a surprise for the people that are watching, but one of them is Chainlink, and that's both on fundamentals and both on price action. Price action wise, 8 month sideways period in which we are just bouncing between $5.5 to $9.5. I think that once we start to break this previous high, we are going to accelerate because then the shorts are piling up and they need to close their positions, but also longs are jumping into the markets because of the arguments they are getting to jump into the market. So that's the first step. And then second, if it breaks 9.5, I think it can also start closing those gaps and you can start seeing a run towards the level which we have around 17.5 and probably even higher, but that's just depending on the structure. If you go back in history, you can also see the price action coming out of an accumulation. And you can see that we also have those retests. And then once it starts to break the highs, it starts to accelerate even more. And then the hype kicks in and it starts to run over, run over. You know the drill. So probably we're going to see more of those runs taking place in the current period when it comes to altcoins, especially when it is with projects like Chainlink, when you discuss this on a fundamental basis. DeFi is probably something we should be requiring into the ecosystem. And therefore, this one is a must have. And this one is into a bear market for 2 years already. But you can find all those altcoins at this point. If you go towards some smaller ones, Scale, for instance, pretty much the same theory, going sideways, flipping levels, finding ourselves into this resistance area and still ready to accelerate even more. Even a metaverse coin, which is Axie Infinity, has been going sideways here, and I'll just finish this. Has been going sideways, and actually, you can say since May we are into this sideways period, although we have been correcting by a bit. Now we are starting to switch the trend as levels become support again. And then you can start argumenting that, okay, we've got this resistance in May. Most likely we crack it, and then we can start running towards 45 or perhaps even higher levels to end off this relief rally. So there are many of those charts you can actually look at this point, but you can ultimately just have a thesis for yourself, as in, is it wise, or if I don't have a position, what would I do at this point? And if you look at it from an investment thesis, I think that right now is a good period to start looking for those longs rather than shorts.
So, do you trade based on more than just technical analysis and reading the charts? Is there like a process you have where you're looking into roadmap and more fundamental analysis, partnerships, on-chain data? Does any of that factor into which asset you
Mm,
choose to invest in? And I ask because so many altcoins have the exact same market structure. So the temptation is to just go out and open a position in every single one of them. How do you like avoid doing that versus just choosing like 4 coins to invest in when all 10 coins have the exact same 1 or 2 year consolidation, same market structure? Like, what's your process for that?
um, Honestly, there's two answers to this. First one is the longer you want to be into the trade, the more fundamentals are going to take over your trading. What I mean by that is if you are a day trader, which means that you've got to trade within 24 hours or within a few days. If you're a swing trader, it's more or less weeks to months. And if you're an investor, it's more or less months to years. If you are into months to years investing, you should be taking into account of the fundamentals. So how is inflation doing? How is the progress of blockchain doing? What is geopolitical happening in the markets? What is the gas price? All that stuff. Um, when you go to swing trading, you can start looking at those levels on higher time frames, which come into play as an important trigger to start building your positions. Then if you're a day trader, it's pure technical. You start to erase all the context because the context makes no sense for your price action based trade. When it comes to altcoins, I think you can specify yourself by investigating projects on social media. So, for instance, Fantom started to rally because Andre Cornier came back and all the updates came out. Matic starts to rally because there's an update coming out as well. Litecoin is rallying because of self-fulfilling prophecy with the halving. Then AI is also a self-fulfilling prophecy because ChatGPT comes around and then all the projects start to run. So you can start looking into investigating into those aspects, but you can also start questioning yourself, okay, I want to build a position into altcoins. Which segments are there? If I want to be into NFTs or into DeFi, what are the largest that I have in that specific corner? Which means DeFi, it can be Aave or Curve or anything related to Chainlink, for instance. NFTs, it can be looks as a marketplace, or you can buy a specific NFT and you have to do some charting. But then you just take the largest one of those of that segment. Why is that? Because the largest ones are usually the ones that have survived errors or have survived attacks. Why do I say that? Bitcoin has seen all those attacks already. It's still around. Ethereum has seen all those attacks. It's still around. If you trade altcoins, I think you want to minimize risk and maximize reward, which means it makes no sense to build a position into a segment called DeFi, into the lower ones, because you've got massive risk of the project's rug pulling itself. Just take the largest ones. You can have enough ROI by just trading those and build your position in those. And then if you trade those wisely, you can start allocating money into the smaller ones. But the ROI on the largest ones can already be going hundreds of percent, which is enough for you. So just making it simple again is probably the way to go forward.
Right. So looking at assets that have the largest market cap, that have the most historical data that you can look back into with the chart, ones that have weathered volatility and rebounded from it in previous years, it's wiser to make a bet on those assets than low cap assets that have basically no price history.
Yeah, it depends as well on the time you want to consume being a trader or investor. If you're a full-time trader, I think you want to specify what you want to do. If you want to look at those small altcoins and want to build a thesis around those, then you can easily go into white paper, social media, GitHub, everything. But if you're just a trader and you want to be into multi assets, I think you need to simplify all those things. And if you have a thesis of the conclusion that the markets are going to rally up and you want to build an altcoin basket, I think the simplest way is to just take the largest ones instead of taking small altcoins. I mean, as an investor, having a few 100% as a potential gain in your altcoin basket is already enough to reward yourself, because the essential is that compounding profits over the years is the way to go forward and not chasing those 100x's.
Yeah, that makes sense. Let's talk about a Bitcoin then. Everybody's talking about Ethereum. The Shanghai unlocks will happen, and every trader has their own kind of thesis on what will happen. So, from your point of view, what are some strategies that traders should or could consider for Ethereum over the next 6 months?
Um, it's a difficult one, as in we're getting the unlock of the ETH Shanghai in March 2023, which is essentially for everything that has been staked in the past 2.5 years. So most of the staking has been done on prices on higher values, but when they locked it, the value of ETH was, I think, more than half of the current price, which means that you could argument that people could be taking profits on those ETH, but in the end, that you can just keep it. Also, secondly, it's very comparable to the Mount Gox case, which comes around
Mm.
quite often when it gets to Bitcoin, where there is a big chunk of Bitcoin going into the markets, and therefore it should be pushing the prices left or right. Then also you've got a case that Ethereum itself became deflationary, which means that the supply that comes onto the markets for Ether is going downhill when it comes to the proof of staking right now, instead of the POW we had. So this is another event in which if you go towards the event, ultimately you don't know what's going to happen.
Mm.
So yes, they can dump those tokens, but they can also use those tokens to stake again or to use it for anything else. There is no guarantee that all this ETH that comes on the market is going to be dumped. So what you should be doing is just simply watch how the event goes and don't trade the event. Erase all the context and make it simple for yourself. If, for instance, usually tops are defined by event because hype is getting built up, which would most likely case what's going to take place with this event, usually. If the consensus is that people expect that people that are dumping the ETH tokens out of the ETH Shanghai, what's going to take place? Well, the markets are going to be dumped onto the actual event. So the markets are going to be dropping. Then the event takes place, nothing happens, market bounce up. So if that is going to take place and if the market starts to drop, you can already see in your price action thesis and your risk reward thesis that it's getting to a level where you think, okay, the reward is getting higher than the risk and the event doesn't really make sense. So you can start accumulating. The other way around, if it starts to rally even more and it makes a vertical move, you can make a thesis of, hey, should I be keeping my position here? My downwards risk is high, but my upwards is reward is getting limited. So regardless of the event, I should be readjusting my portfolio here. And I think
Mhm.
doing it in that approach, you are in control of your portfolio. You make the decisions for yourself, and everything that happens in the markets is just noise for yourself. Just erase all the context and all the opinions of everyone, and you can just keep on compounding your profits and keep on compounding your portfolio.
I like that you mentioned readjusting your portfolio. I think that's something traders have learned in the last year or two is that you can't hold all and be long forever. There's just times where you need to take profit on your positions to reduce your risk, to reward yourself for all the time and research and effort that it takes to open up crypto investments and to maintain them and the charting and to preserve some paper for those eventual market drawdowns so that you can reposition even better. So I like that you mentioned that. Next question, traders hate, but audiences love them. So what's next? What's first for Ethereum price? $4,000, $10,000, or $1,000? I know you don't have a crystal ball, but just based off of your analysis and experience in this market, which one do you think is most realistic?
Uh, I'm in the group that believes that the bottom is in. I think that if Bitcoin really wants to drop towards new lows in Ethereum as well, I think we really need to get that alien invasion because otherwise it will probably not happen. Um, so I think that we are into the group that, or I'm into the group that believes the market has bottomed out, which means that Ethereum to 4K is most likely going to take place. Um, I don't believe that Ethereum goes back to 1K after the swap towards proof of stake. Also, the fundamental growth it has inside the entire ecosystem, meaning that it becomes deflationary, and therefore the rally will start to take over even more. So I'm into the group that expects Ethereum to outperform Bitcoin, um, potentially flip it for a certain period of time. That could be done.
Mm.
But I expect Ethereum to rally to 4K instead of to 1K. And if it gets to 1K, I'm happily wrong on this entire thesis, but I'm also happily buying Ethereum.
Mhm. Everyone always talks about Ethereum and its USD pair. Everyone talks about Bitcoin market dominance and altcoin market cap and altcoin market dominance shifting, and they build their thesis around Ethereum price on that. But what do you see in the Ethereum Bitcoin pair? Is there anything valuable happening on the chart that kind of reinforces your thesis on this is why I think Ethereum will flip Bitcoin price one day? And this is why I'm long on Ethereum.
Like the thing with Ethereum Bitcoin is that at this point, we've got a case of the market relatively consolidating on ETH Bitcoin. I think the rally has been taking place there already, which means that Bitcoin dominance goes up, but Bitcoin dominance goes up because the largest portion of the Bitcoin dominance is ETH against Bitcoin. So if ETH against Bitcoin drops, Bitcoin dominance goes up, and all the other altcoins can just continue rallying. Why is ETH against Bitcoin dropping for a bit right now? Because it has seen a significant rally when it comes to the proof of stake event taking place not long ago. So right now we're just into a consolidation period, which is on a higher level, making significant higher lows, and just consolidating. If we had this run of Bitcoin 3 years ago, Ethereum against Bitcoin would have been falling way more. But right now it's just consolidating. So the moment that Bitcoin starts to rally or starts to stabilize, ETH against Bitcoin starts to take off again, and then we can start pushing towards that potential flip.
Hmm. Now that makes sense. We've got a question from an audience member, Crypto Cloud. It's about AI tokens, and AI tokens are running, right? They're almost like meme tokens, and ChatGPT has made AI tokens all the rage. They're really important right now. No problem. They're really important right now, but in my experience, just like with DeFi, these tokens all do 100, 200, 300, 400x. A lot of it's vaporware, and then they all go back to zero. And maybe only one or two actually has some fundamentals and some shelf life. So when it comes to these AI tokens, which ones are you looking at? Which ones, can you name one or two that are actually interesting to you that's not just hype, but you actually see some potential in that project?
Well, honestly, I had those questions as well when it came to the NFT hype we had last year. And usually, what I do with the first hype is that I simply just trade it based on prices, and then I just let it go, because the first hype is usually nonsense, and then the real build starts to take place, and then the second wave comes along. And I think we are on the edge of having a second wave in DeFi. We are on the edge in a second wave of NFTs. So right now you can pretty much position yourself better in those two. And then also, we've just witnessed a significant rally on AI. And then you can question yourself, how much more of an upside can I make when I get into AI right now? I think it's getting relatively limited because everyone is discussing it. There has been a
Mm.
5 to 10x already on most of those. So the upside is getting relatively limited. Well, the projects that are not being discussed about, which is DeFi, which is layer ones as well, they have all been delaying their upgrades. They can still produce an ROI that is 3 to 10x, and it's way easier to buy than something that have been running already. Because, as I just mentioned earlier in this podcast, the reward is relatively limited towards your risk, and people should understand the concept of risk and focus on that rather than focusing on the reward you could get. So I think that I'm really not interested into any AI coins unless it is anything like Fetch, for instance, which you can pretty much trade on
Mm.
price action, and then I'm just day trading it.
Yep. Yeah, I agree 100% on that. FET is an interesting project, and there's not perpetuals for it yet, so there's kind of like that unlimited upside effect. So I like that. And FET seems to actually increase its value accrual thesis as Cosmos or the Atom ecosystem develops out, because FET's kind of integrated with Cosmos and Kepler Wallet and all that. So as you see Atom and Osmo and other Cosmos related tokens
Hmm.
go up, then there's more hype about FET. So I totally agree with you on just like trade the pure technicals speculatively with a very small percentage of your portfolio for Blur or NFT marketplace tokens, or for like airdrop tokens, or for AI tokens. If you want to just go to the casino and gamble a little bit with a very small percentage of your portfolio, then do that with AI tokens. But like you said, the first wave is all speculation. And then after that all clears out, you start to see what projects actually have a concrete foundation. And of course, they'll be available at a better pricing. So totally agree with you on that. Um, so FTX caught people off guard. And the thing with FTX, like I know you run a company, and in order to set up
Hmm.
hedging strategies and manage risk, you've got to keep some funds on exchange in options or in derivatives or in perpetual contracts to like help you in those spot positions that you have. I get it. It's necessary to have an exchange where you keep funds, right? And you build strategies. And people got caught off guard because of that, even people that manage their risk perfectly, like you. But I mean, you have to use Binance, you have to use FTX, so that happened, right? And now we're
Yeah.
getting all this drama with stable coins. The SEC's cracking down on Paxos. People are worried about Circle. Tether is always a safe option, but is it really? There's a lot of unanswered questions for multiple years about Tether. So, just what's your take on this? Because if in the US, somehow regulators are able to discourage banks from custodying crypto assets or dealing with crypto oriented businesses, it would be very difficult to on ramp and off ramp into crypto. And that's going to impact valuations in some way. So, what are you thinking right now about stablecoins, and what sort of preparations might you be making?
Well, there are so many layers in this topic as well. As in, they crack down stablecoins because they are called securities. And then it's usually for the stablecoins that are on exchanges, so instance Paxos and the staking that Kraken is doing on stablecoins. And I think it's classified as security because you can farm and stake with those stablecoins. I think they don't have that big of an issue with stablecoins itself. And it's also funny that people are currently focused on the fact that they are cracking down on stablecoins. While in the meantime, you can hear Fidelity, BlackRock, all the big guns actually investigating into crypto and setting up trading desks so you can actually buy crypto through them. Which means that it's probably half of the story what they are doing right now. What they want to do is that they want to regulate the entire market, and through that, um, certain aspects of the crypto markets should be restructured in a way that it's consumer protective, which means that the ban on stable coins isn't probably that bad. It's probably protecting the consumers, just like they crack down leverage trading. If they're really going to ban crypto and it's impossible to on ramp and off ramp crypto, yeah, then we are into trouble. But I don't believe that that's just a huge hurdle right now. I think it's more or less based around KYC and AML policies. And you can actually question whether that should be done. But okay, if that's going to be taking place, regulation is going to kick in, which makes the market even more as an adult or an adult market, which makes the path open for even more big guns to jump into the market. So focusing on this news related item is probably just one side of the story. And I think you should always look on several concepts. And then BlackRock and Fidelity jumping in is probably telling you the real story.
Good, good. I like that. That's valuable insight. Focus on the bigger picture and both sides of the story. I like that. Well, that pretty much wraps it up because I promised I wouldn't keep you forever because I know you've got that match to watch.
It's
So,
also getting dark
thank
here. I completely forgot.
yeah, it is getting dark. Yeah, I noticed that. I noticed that. But as a wrap up, I think the most valuable things the audience can take from you is that investors should simplify their approach. Don't get analysis paralysis. Don't use 5,000 different indicators and stay on Twitter all day and analyze every single economic report and all the news flow that comes out and let that impact your trading. Find a simple strategy that works for you, that's tested, and that is like, you can, it works with repetition, and it's simple. That's one thing to do. Filter out the noise and ignore all the drama, and do your research before you press that buy button. Now, of course, everything that Michaël has said and that we've discussed is not financial advice. He's not telling you to go buy certain assets and do 100x leverage. Neither is Cointelegraph, neither am I. So with that said, it's good that the market's looking up. I hope that we can see this bullish momentum continue. That's my alarm that's telling me that it's time to go. And that pretty much wraps it up. So I appreciate you coming on to the show. If members of the audience want to hear more from you and follow your analysis, what's the best place where they can find you?
It's internet, yes, of course, but it's Twitter, Instagram, or YouTube where they can find me under my alias, which is Crypto Michannel. Very
All right.
simple.
Appreciate it. Appreciate it. Yeah, it's very simple. Go and join his army of nearly 700K followers. And thanks for everyone for listening to Market Talks. Please hit subscribe if you enjoyed the show. You can find me here live every Thursday at 12 p.m. Eastern. Michaël, it's been a pleasure.
Thank you very much, Ray, and all the best with the show.
All right. Crack out the pints, put on your shirt, enjoy the match.
Ciao, thank you.
Great. Talk to you later.